I'm really excited for the conversation we're going to have today, guys. I'm joined by Sorin Grama, the CEO and founder at Transaera, and Chris Smith, Managing Director at Energy Innovation Capital, as well as Matt Price, President at Activate. So I'm really excited for the different perspectives that the three of you bring. As a founder, as a VC, and then sort of as our connector piece with Matt. So I'm looking forward to hearing more about yourself. So if you guys could just give brief introduction, 2-3 minutes, and then we can jump into some of the questions that we have for all of you.
My name is Sorin Grama. I'm the CEO, co-founder of Transaera. We're developing an ultra-efficient room air conditioner. And our mission is to basically reduce the cost of ownership of air conditioning in half. That means doubling the efficiency of air conditioners, today's air conditioners. And for those of you that have worked in thermodynamic systems, you probably know this is a very difficult problem. We do have some approaches that we think are revolutionary, using some new designs and novel materials. So that's the background. We can talk more about that during the session. But our overall goal is to make air conditioning affordable for billions of people around the world, particularly in emerging markets where air conditioning is still considered a luxury. It's quickly becoming a necessity. I spent a number of years working in emerging markets before Transaera. My previous startup was a company called Promethean Power Systems. We developed a thermal energy storage platform for refrigeration. You can see the theme here, cooling and refrigeration. In this particular application was done in India, of all places. This is a dairy industry in India that needed a problem to be solved. And my God, we spent many, many years at it, but we finally solved it. And that company, Promethean Power, is running sustainably, doing well, and scaling up in India. I spent a number of years living and working in India, getting the company off the ground there. And after coming back the stateside in 2016, I started looking around for new opportunities. That's how Transaera came about. The one other thing I'll mention, along the way, I was fortunate enough to be part of the founding team of the Greentown Labs Accelerator Incubator here in Boston. Promethean Power was one of the founding companies of Greentown Labs. So and I was on the board of Greentown Labs for a number of years until I went to India. So I watched that whole ecosystem, or I helped to get started. I watched it grow, and I'm still part of it with Transaera. So I go there every day. I was there this morning. Happy to offer any thoughts on Greentown Labs as well. And last thing I'll mention, because I was watching Steve Blank's presentation earlier, I worked on a lot of SBIR grants, NSF, that funded our developments both at Promethean and at Transaera, and of course iCore and all that stuff. So if we run into that discussion, we can do that as well. Thanks.
Chris, would you mind hopping up next?
Yeah, sure. It's a pleasure to be here. Thank you, Mike, Sorin, and Matt, for having me be part of the conversation. Christopher Smith, I'm a managing director at Energy Innovation Capital. We're a venture and growth investment firm that's investing in technology companies that are enabling the next generation of abundant, clean, and accessible energy. We are really investing around 3 thematic areas. The first one is the energy transition and the movement towards low and lower carbon energy systems. And involved in that is obviously a very big push on electrification, which I'm sure we'll talk about at some point today. The second one is really around the digital transformation of industry and conventional industries in particular. And it was an area that I got very interested in around the 2010 timeframe when I was seeing a lot of the digital architecture and infrastructure being built out on consumer platforms and having it start to be adopted by industry. And we've just seen more of that over the last 10, 11 years. And then the third area is really around the more sustainable development of conventional energy resources. And through this period, as we move from liquids to gas and different fuel systems, how do we do that more sustainably? And that can be everything from monitoring, measuring, and abating methane leaks, through to alternative. I think there was some conversation around CO2 to materials and gas to materials and biological pathways of low carbon pathways to do that. So we get very interested in about those types of things. We're physically located in San Francisco Bay Area, the New York and Boston area, and Houston. So we're really trying to, kind of touch on what I think are three very important energy innovation areas, and then the financial sector in New York. We have 27 companies that we've invested in over the course of the last 5 years or so. And we're pretty active as investors with founders. I think we have board observer seats in the majority of our investments, and the majority of the team have been operators in industry before, and so we like to bring that and really partner with the founders to help grow and scale their businesses. And then we also do collaborate with corporates. I know there was a comment in the deep tech conversation just before around how are corporates going to be involved in this? Well, we see corporates as a very important part of this equation, and through our Fusion program, we collaborate with them on innovation and help to link their innovation agenda with some of the leading technology and technologists that we are finding in the market as we're going about our investment activities. So that's a thumbnail of Energy Innovation Capital, and excited to talk a little bit more as we get into the conversation.
I'm really interested to hear a little bit of the crossover. I'm sure your work with founders and Sorin being a founder and doing some of that scaling is really going to hopefully come out in this conversation. And I'm sure Matt, in this intro you'll talk a little bit about your pathways and engaging with both sides there.
Yeah, so appreciate that. Thanks, Mike and Patrick and the BMNT team for having me join. Huge fan of the community that you guys continue to bring together, and it's really important work. So thanks for that. So Matt Price, president of Activate. My organization at a high level tries to act as a bridge between Sorin and Chris. We run what is called a fellowship program, where we are trying to support founders who are working in the fundamental breakthroughs in material sciences, physical sciences, biological sciences, really manipulating the building blocks for how we think about the technologies that affect the consumption of energy and resources in our society. The types of, the way we operate as an organization. So we're a nonprofit organization, and we run this as a 2-year fellowship program. Our general view is there are really dramatic shifts that our society needs to make as it relates to how we think about climate and sustainability. And we think that scientists possess a really powerful skill set in order to take their ability to manipulate these building blocks and to truly invent the future. For a whole variety of reasons, it's really hard, really risky. It takes a lot of time and is really challenging to do that. And about 6 years ago, when Activate got off the ground, the big concern that we had as a leadership team was there wasn't enough shots on goal. There weren't enough Sorins of the world who are committing their time and their life to taking on these really hard, thermodynamic types of challenges. And so we wanted to make an easier pathway and an easier process for founders to take on those big risks. When we look at just how risky these technologies are, the experience was that this is just too risky for even venture capital and the more traditional funding sources at the earliest stage. So we set ourselves up as a nonprofit organization. We primarily are working with government entities like the California Energy Commission or the Department of Energy, the Department of Defense, and working with both philanthropic sponsors as well as government agencies who have a mission to support these really early stage technologies that are too risky for private markets, and to use Activate and our model of support to get them to the point where either the Sorins of the world have enough information to say, hey, this is a great idea on paper, but it doesn't translate into economic value, so I'm going to go do something else with my life, whether it's the next thing. Or they're able to truly quantify how valuable that technology is, identify first customers, and to even think about how much of that value could be captured based upon different types of business models. And so at Activate, we work with our founders and our fellows to try to answer those 3 questions really well in about a 2-year time period, and help them then, based upon having answers around those questions of value and value capture and creation, how to align with the right type of funding sources. So, whether it's a traditional, venture capital firm like what Chris is involved with, or whether it's impact capital, whether it's, working towards not even standing up a standalone business, but actually pursuing more of a licensing model and working with corporations, whether it's creating a nonprofit organization and doing it through open source. Like, we think that there's many different ways upon which really valuable technologies can be brought into the market. And we do our best to focus on alignment on how to do so. So we've been doing it for 6 years. It's about 80 some odd fellows that we're supporting in Berkeley and in Boston right now, trying to expand to other regions of the world, or at least, of the US. And I think it's about 56, 58 some odd companies that have come out of the program over the last 5, 6 years.
That segues really well, actually, into my first question for Sorin, which is specifically about founders and that initial stage of development when you've got a great idea and you're thinking about fundraising and tech, the intersection of your ideas and then creating a sustainable business model potentially. Can you talk a little bit about what that process was like for you, and then what did you learn? What were your takeaways?
Mm-hmm. Thanks. Yeah, I think, with the second startup, Transaera, I try to apply a lot of the lessons I learned from the first startup, Promethean. And at Promethean, we kind of got sources of funding from angel investors early on. There was some promise of some solar development and all of that, but it wasn't the right source of funding at the time. In fact, it took us a lot longer to develop the technology. And in the end, most of the early development and support was from government grants. So the first thing I did with Transaera, we applied for an SBIR grant. And NSF is a rather broad mission of technologies, but could have been DOE, could have been DOD, could have been any of the organizations that offer SBIRs. And before that, I actually did the I-Corps program, which I totally encourage and support. And we spent the first 6 months of the startup Transaera just talking to people, and having $50,000 in a pocket to travel. This was before pandemic, was great. I think my playbook was very quickly knowing that VC money is not going to come for a while, that we still have to prove the technology. We went for the government funding, phase 1, then we got a phase 2. Luckily here in Massachusetts, we also have a lot of local government grants. Massachusetts Clean Energy Center is a big supporter of startups. And so we tapped into all those sources, and to date, 3 years into the journey, we are still mainly funded by the government grants. So, that's the nature of these energy startups. I think, it takes a long time to develop, building prototypes, physical prototypes, hardware prototypes. It takes a long time, and you really have to be ready for that marathon, not a sprint by any means. So, I learned that I have to be really patient, that just go for the right sources of funding. Wait until you're ready to really have a prototype that demonstrates a breakthrough performance before you even go talk to the investors. And then you can have a conversation with the investors, but really at that point, and maybe Chris can comment more on this, not every investor is the right investor for this kind of technology. I mean, I'm very careful in selecting and filtering the calls I get and the conversation I have with investors. I mean, if they understand hardware particularly, then I think that's conversations a little easier. If they tend to invest mostly in software and digital, that's fine, but that's not Transaera. So we have to be very careful in how we filter those and the stage that we're at and the length of the duration of time that they expect for this thing to really bring anything to fruition has to be agreed upon. I think 5 to 7 years is pretty optimistic in this case. We want to look at the 7 to 10 year time frame and kind of start making putting the measures in place to at least obviously generate revenue very early on, but perhaps not significant profits for a while, and then having significant impact in that 7 to 10 year time frame. So those are the things I learned. I mean, when I got into Transaera, I knew it was going to be another 7 to 10 year journey. So, Promethean was, 7 years before we actually got the product into a commercial stage to selling commercially to dairies. There were a lot of twists and turns along the way. So I learned my lesson there. But that company is 14 years later is running and having great impact. And you just have to be patient. So.
Yeah. So patience and looking at a wide variety of potential sources, really expanding your purview to what might be out there.
Yeah.
Yeah. Yeah. Chris, actually, that was a great note. Can you talk a little bit about Energy Innovation Capitals? You touched just briefly on, the thematic areas for funding, and what the group looks primarily at. Can you talk a little bit about, when somebody's ready, the point at which a group looks like, this is a place where we can, make a difference and for both us and this founder and their group?
Yeah, absolutely. So the one thing I want to say out of the gate, I really do appreciate the efforts that Sorin, you did, to get Greentown Labs up and going, and Matt with Cyclotron Road and Activate. We've had a long history together, working on this problem of, how are we going to get technology out of universities commercialized and scaled, And so when I kind of look at the earlier stage side, it is hard. It's an idea, a concept, a technology. It's not necessarily a company yet. And so one of the things that we are really looking for when we start to invest is, how does a technology transform into a company, and how do you build the team, equally around, how do you build a team, build the market, and have a scalable, growable business? There's really three things that we're kind of thinking about at the investment stage where we are. And I would say, we will do some seed earlier investments, and we will do growth investments as well, but we're probably, well characterized as a kind of Series A, Series B investor. Is kind of where I think our most common investment is. And we're really looking for kind of three things. Is there a business in a market? So you've got to build a business and build a market. And so there has to be a market need, like a very tangible market need that you can go after, that's quantifiable, that has value for a customer in some way. You have to build the product and the technology. And so I think the majority of the founders that we speak to spend 95% of their time, on this. And it's critically important to get the product and the technology commercialization in place, but it's also equally important to build the company and build the team. So that's the third piece. So is this company at a point now where they're ready to scale out and move from an individual founder, to an executive team that can move from, maybe some proof of concept pilots through to, I've got $1 million in revenue, and I'm ready to try and figure out how to get to $5 to $10 million in revenue, and how can we work together, through the next many years, as you said, 5 to 7 to 10 years on building an extremely valuable enterprise. I'd also say that we're very big fans and really do like the concept of joint government and private funding coming together, both through grants and other government programs. We're investors in Orbital Sidekick, which I think you'll hear about later today. They have a very active program with the Air Force, for hyperspectral monitoring of energy assets and other assets from space. We have an investment in a company called Oceanero, where the government played a big role in grants. This is a submersible and autonomous sea drone. It's basically a big sensor payload, and that was, has government and military applications as well as commercial applications. And so when we see some of the government funding coming in alongside the private funding, we think that's a very good way to de-risk the investment for us, but also give, non-dilutive capital to invest in the hardware, and the initial development of the software platform that you're going to need to have a proof of concept. So, so probably some of those things would be, what we're most after.
I'm wondering, Matt, you talked about being a bridge builder. I'm wondering, when you're working with fellows, how do you manage the point at which they may have an idea, they might have a potential business, but they might be still in that patient stage that Sorin was talking about. What kind of work does Activate do in that sense to get them to that point, or is that something that you rely more on them to do?
It's a good question. And I think to understand the answer, I'll just put a couple of things in context. So the stage upon which Activate is intervening is usually there's a team of like 1 or 2 people And we can provide a 2-year financial stipend, travel funds, because customer discovery matters so much. ICOR pretty much exists all throughout the 14-year tenure of every company. And so we're starting with like teams of 1 or 2 that, at best have some data coming out of a benchtop, academic lab setting, typically maybe out of a garage, usually being built by scientists and PhDs using materials that are not, at the scale upon which energy solutions need to be made. And then other times, people have taken academic literature from a few different disciplines, put it together in their head and said, oh, if I made such a widget, like that could be pretty dramatic and profound. How am I going to figure out how to put that together? So just that, since we have so many government, sponsors on this, like we very much talk about things in the TRL level, and like we are engaging at the TRL of like 0 to 1, 2, maybe, in terms of coming into our program. Technically, from an eligibility standpoint, if somebody has raised more than $2 million in private capital, then they would not be eligible for our organization. And there's no real magic around 2 million, but we wanted to have something that is a number that was representative of whether it was too risky for private capital to be able to engage with this or not. So it's like really small teams, really low level of information, but there's there's enough foundation there that we think that we can get some really quick learning cycles on the technology into these questions about how to mature it. So our recipe is fund them for 2 years with a living stipend and do so as a grant. We also give them about $100,000 to spend at a national lab or a university that we partner with. So they're coming in and accessing existing lab space rather than having to raise a couple $1 million early on to build out a lab and hire those initial scientists. And we do so in a way where we created a legal contract that allows the IP to be pure and still under control of the startup company, even though they're still utilizing the facilities of existing infrastructure. So with that context in mind, like the first and most important thing for us, even before customer discovery, is a like first order techno-economic model, which is like, start making some assumptions on cost, start making some assumptions on value, put it into a model, see what do a tornado chart, and just figure out like what levers do you even need to go and better understand in order to see if there's likely to be economic value. Because if there's not going to be economic value on paper, like there's definitely not going to be economic value once you get into all the technology development stuff. And then the next thing is just to be really rigorous in connecting with people who have unique insights into how that technology can connect with different marketplaces. So a lot of times we're dealing with things that are advanced materials and are, what are oftentimes classified as platform technologies that could be used for many different types of applications and in different segments of the supply chain. So like, marrying up that first techno-economic model with an assumption around that first application, and then providing that connectivity to like, who are the experts that can help validate that model, and then really inform the scientists on like, what are the experiments that need to be run that industry cares about? Because oftentimes, in the academic setting, if we think about power generation and in the solar markets, like how efficient can you get to a cell? But like cell efficiency may not matter. Like if it's perovskites, it may be longevity or maybe manufacturability. It's probably anything except efficiency. And yet in the academic setting, like we're taught like push the boundaries on efficiency, or push the boundaries on power density if it's batteries, or push the boundaries on like usually the top element of performance that doesn't necessarily drive cost and doesn't drive the business case. So a lot of our connective tissue is then working with the fellows over that 2 years on who can provide that insight about what data do you need to show in order for, the Chris's of the world and the corporations of the world to say like, okay, I can tell that it's not going to blow up when I put this prototype in the field. It's going to have the longevity that I need. And then it's going to meet the business case that I have to put forward to my, either to my board or to my customers, depending upon where they sit in the supply chain.
That's a great point. I'm wondering, maybe we could shift slightly, thematically. Do you find, as you've been doing this, I think you mentioned 6 years, is there a trend toward, a place of mutual interest or a potential disconnect, in either sense? Like, founders are pushed in this direction or in another direction, and investors are really looking at something else, a place where that that model, the techno-economic model that you mentioned, like, is it really accurate in some spaces, and you're seeing a trend and a lot of interest in one area versus another?
Yeah, it's a good question. It's certainly, when we started in 2014, it was, I think, the first year that the Clean Tech Network or the Clean Tech Group reported that there was zero new financings in new clean energy related companies. And it was like the first time that it's ever happened. And so part of the origins of Activate was just like, unfortunately, there just wasn't venture capital money supporting like even ideas that had like some element of a prototype as a part of it. Things have shifted like really, pretty dramatically, where there's a much healthier community of deep tech investors, clean tech investors, and those that have taken a lot of the learning curves of the last kind of 15 to 20 years of investing in clean energy and semiconductors and life sciences, and applying it now to fundamental, shifts that we're seeing in our market, whether it's in climate change, whether it's in space exploration. There's so many fundamental shifts that have happened through technology and just other business model innovations, and investor capital is back, which can be great, and I think largely is great, and it's great for the technologies that have good where the business model of the technology is well aligned with the business model of venture capital, and so we're seeing a really strong connection and alignment between a number of the companies in our portfolio that we've been supporting in the new investor classes that are out there. At the same time, there's also been an emergence of like more impact investors. And so, people who are either like setting up their fund structures to be evergreen or longer duration and accessing capital that doesn't have the same, return metrics, or willing to be more patient. And what we're finding is that 2 years has been just enough time. Either the 2 years that they have in our program or the additional time that they get from government funding has been enough for a lot of our companies to feel like they did get good alignment in that first round of financing. I think we're still too early to know how well are they able to keep that alignment, because ultimately, if some of these technologies require $100 million in order to get to impact, like they're going to have to. Like, we just don't have philanthropic funds or Department of Energy funds that are writing $100 million checks over and over again.
Right.
And so, like, we may get stuck into an environment where these technologies do have to shoehorn back into $1 billion venture fund business model type of structure. And I think we're just early enough in Activate's journey that we haven't seen, too many disconnects in terms of companies having to do that, because that ended up being the only source of capital. And I think on the positive side, we're seeing examples that I think for me are more reflective of how oftentimes I think these should go, which is, so Qberg was a energy storage company that was in our portfolio developing a lithium metal battery company. And we asked all of our fellows this day one, like, what does success look like for you? And, Richard's answer was like, this is a really powerful technology and I want to get it brought into the marketplace as fast as possible. And that's probably not investing a couple $1 billion to build the next gigafactory on lithium metal. Like, I want to prove this out to the point where it then makes sense to get it merged into a larger organization and then play an active role in scaling that out. And like, I have no idea how Richard did it, but like over a very linear process in like a 4-year time frame, he did just that, and recently was acquired by Northvolt and is helping to drive, the integration of lithium metal into their production and work on next generation development. And so, like, when I was an investor, a venture investor for 5 or 6 years, and part of the lens that I brought into Activate is, in the series, like, I don't know whether it's the A or the B or the C or the D, it's kind of evolved the definitions over the last 10 years. But at some point we get into a world where venture dollars and equity dollars are being spent to duplicate or replicate existing sales forces, existing manufacturing, existing customer service, all the things that our customers require. It kind of exists out there already through existing supply chains. We're just having to reinvent the wheel in order to try to capture more of that value, or to get to a larger revenue source that leads to the multiples that gets to the exit that the venture investors need based upon their fund size. Like, if a technology can fit into a supply chain and you can access existing customer service, existing market, existing sales teams, then shouldn't there be earlier exits into corporations rather than trying to replicate or compete against those things that are already in place, especially when when those companies are trying to sell into a conservative customer base, which really is driven by relationships and experience more so than like technology breakthroughs.
Right. More successful earlier rather than trying to chip at a bigger piece of the pie, just to do
I'll
so.
add here to this because I think this is an interesting topic, the role of corporations, corporate partners for this kind of deep tech hardware startups. I feel I totally agree with Matt. Like they must play a role, and this is a very viable path. In fact, something we're exploring too, working with large companies that already have that infrastructure established. They have the distribution networks, they have the sales teams, they have even the manufacturing infrastructure to help us scale this technology. So, you have to be a little more creative with capital raise. Venture capital only makes sense for certain startups. It's a lot harder for hardware, deep tech startups like ours, I think. So that's why we go look at the government funds. We look at corporate partnerships. We look at co-development with someone. It doesn't even have to be a venture investment from a corporate venture capital, but it could be a co-development of the technology with the partner where they fund part of that development, fund part of the team. They'll own the technology for particular applications or a particular market and so on. So we have to get much more creative. And I think that's the way to go to scale these up is to get them into the right infrastructure for global impact.
Yeah, and Chris, you actually brought up the corporate partnerships that the firm thinks about. How are you thinking about this as an investor?
Yeah, I mean, I think there are a couple of different things to kind of react to. One, I think, Sorin, your comment around know your investor and know which investors are going to be best for you is really, really important. And also, it's not as clean cut as, like R&D technology and incubator and a VC. I mean, the VC split into there's seed investors in the VC. You got angel money coming in as individuals. You got seed money coming in, from institutional investors and people and family offices and Series A and B and D. And so, and then, some are more impact oriented. I mean, of course, we're seeing more and more where firms are now incorporating ESG metrics into their fund reporting financials. So really understanding, your investor and your source of funds is very important. And then I think, the way I look at this is like the corporate is a whole nother lens. So we've seen a tremendous amount of increase of activity in corporate venture capital work. I would say that, probably in the last 5 years, we've seen a lot of, kind of like a handful of very successful corporate VCs deploying growth capital to an abundance of corporate innovation activity that is not only doing growth capital, but doing some seed capital and also trying to think about innovative ways to partner with startups. I mean, the reason we got so involved with corporates and created this fusion program was because we realized that the companies that we invest in, because they are hardware, because they are software, because they're longer duration, are either going to pilot, deploy, or get acquired by a corporation. And so we better have very good relationships with them. And so we put a structured place where we can try to elevate the conversation between the startup and the corporation from a sales call to a procurement person to a strategic discussion around how does this fundamental technology that I have apply to a problem that you have, and how can we kind of at more of a CTO level or kind of senior level talk about kind of big impact solutions. And so we've done this. We have a company that we've invested in called Moliere, and Moliere is creating nanobubbles. It's a fundamental platform technology to increase the gas transfer rate from gas into liquids by creating little tiny bubbles that don't rise in columns of fluid. So you get massive inks. And also, so by the way, anytime I start a conversation where thermodynamics is referenced in the opening sentence, I think I'm in the right panel. So I won't go too much into fluid dynamics here, but there is but it is a fundamental interesting thing where you're going to take, really drastic improvements in gas to liquid transfer rates. And so the applications are massive. I mean, it started off with, kind of thinking about water treatment and water management with aeration and oxidation, moved into, hydroponic aquaculture, and then, now moving into fisheries and the applications keep expanding, and they're doing that by working with corporates and strategic partners in some of the things like you mentioned, getting creative around legal structures. How do you create and think about licensing of technologies within JVs for certain market segments? And so I think there's definitely a path here where corporates can really play a role, not just in buying things, but in helping to develop markets and having a joint value that's a lot bigger than a sale.
Yeah, and if I can tie it back to the earlier words I said, patience. The one thing I learned with working with corporates, you got to have a lot of patience. They are slow, but if you know how to work with them, I think it's totally worth the effort for any entrepreneurs out there. We have a corporate partner that we started our collaboration, let's say about 2 years ago. It's now starting to really kick in and really generate results. But we started very slowly. We started with a small project. They put some folks on it from their own team on their own dime. They helped us out with some initial prototypes, did some analysis. From there, we took it to the next level. We applied for a grant together. They became a sub-awardee to us for some particular work on this grant. This is the SBIR grant. And then they allocated more resources and so on. But it started very, very slowly and with a very specific project. And I think if you can identify that initial project and get the buy-in internally in the corporate to allocate the resources and the funding internally to work with you, and then show some good results, say within 6 months, then you'll have a good start. And so right now, I have conversations with corporates. They're starting just now with the mutual NDAs, and I know it's going to take 2 years for that or most 2 years to give some results, but that's okay. And gotta be patient and work with it.
So can you talk a little bit more about some of those challenges actually? What were some of the things that you were initially thinking, what's in that 2 years that you're waiting for, thinking this will pay off in the end and I know it, but I've got to get through this to make sure that it works out for us?
I mean, I think the challenges with any hardware startups is just, it takes a long time to do these things. And it's just the usual stuff. Like you assemble the thing, you have to build 2 or 3 versions before you actually get it to work well. So, and just the nature of these things. We have a big milestone we're working towards right now. And, it's where it was supposed to be last week and now it's going to be next week because, one part didn't show up. It was, for example, the supply chain didn't deliver on time and things like that. We have very esoteric components that we have to order. And it's actually been a little more difficult now in post-pandemic world with a lot of components not being available. So things like that, as simple as that, just takes time to fit these things together and see how they work. I'm not sure if you're looking for other challenges. I mean, it's really just, it takes a long time on the corporate side to get the organization shifted and, approvals and all the command chain there. And I think that's part, for example, I work with a company right now that it took them about a month to give us a mutual NDA. That was how long it took to just get that form out. I know and that's just like a standard NDA, right? But I think they had to get a lot of people lined up internally to even agree to work with us on this particular project and start disclosing information and so on. So perhaps someone with a more corporate background can give us more information how that works behind the scenes.
Well, Mike, can I jump in here?
I was just about to ask.
So, one, I'll say I feel for the corporates. If I put myself in their shoes, Chris probably sees 500 to 1,000 business plans on any given year, across the organization. I think the corporations are seeing the same thing as well. We just, the amazing thing about our country is we have an amazing amount of innovation and creative ideas and entrepreneurial spirit. And a lot of the smart entrepreneurs know, I got to go get corporate insight and work with them as partners because of all the things that we've talked about. So they're just getting inundated all the time with these ideas. And at least with a venture capital firm, you kind of have a 10-year strategy in place in terms of what are you investing in, or at least on that cycle. Things are kind of set as where you're putting money. But in the corporations, business strategies can change, decision makers can get promoted and change organizations. Like there's just a bunch of organizational flux. Like for me, like I've distilled it down. There's a huge signal to noise issue that entrepreneurs have to deal with as it relates to how they work with corporates. And I think they really need to be, empathetic to the amount of noise that the corporations are hearing as it relates to the new types of innovations that they can work with. So one of the questions that we asked at Activate is like, well, how can we help with that signal to noise, ratio and signal to noise issue? And we took something out of the playbook of Y Combinator, which is one of the leading accelerator programs that saw, noise and friction as it related to really early stage investments with price seeds and convertible notes. And so they created the SAFE, as a simple agreement to exchange money between high risk investors and early stage companies. So we asked the question, like, is there equivalent on the corporation side? And actually, with a shout out to the Department of Energy and their Innovative Pathways program, they supported Activate in a 2-year grant to come up with a simple agreement for partnerships. And so we called it a SIPA, Simple Partnership Agreement. And it's just to get at that nature of reducing the legal burden, reducing the risk, reducing IP contamination considerations so that, the Sorins and their corporate partners of the world can very quickly get into the substance that's needed for both parties to figure out really quickly whether they should be moving forward with each other or not. And so we've had that out for about 2.5 years now. It's on our website. It's a commons document. Anybody can use it. And we found it, for the entrepreneurs who are trained on how to use this as a tool to facilitate faster exchange of information and even faster exchange of money, at that earliest stage. I think they're seeing that it's become a really helpful and powerful tool. And for me, it's because it helps cut down the signal to noise issue, or at least makes getting the wrong partner, the risk of being in the wrong partnership goes down substantially. Because the money is small or not there, or because the IP implications of it are not there, through the ways in which the scope of work is guided and structured in this type of agreement.
We just, what Matt has pulled together there and try to get common frameworks around, I think is really important. I remember talking to you about that 3 years ago as you were launching it. I thought it was a fabulous idea. I mean, there is a lot of friction in the contracting process. The corporations can have 75-page MSAs and basically all the protected provisions in the world. And, and you have to work through that. And the startup's board is not going to really let you sign on to things that put the company at risk. And so there's there's just like some tension in the system. I don't know. We do try to do some almost even like workshopping also with some of the leadership of the corporates we work with. And we just talk about like how, I think on both sides, as Matt was saying, as a founder, how do you put yourself in the shoes of the corporate, but also in the corporate, how do you put yourself in the shoes of a startup CEO, which is an incredibly challenging and hard and stressful job. So, I mean, the things that are on your mind as a CEO is, I might be out of money in 6 months, and so if it takes me a month to get an NDA in place, like I have time is my resource. So how do I prioritize my time? And so I think, just some empathy on that side is really important, but also just really understanding the position they're in terms of the CEO's job is to raise money and stay in business, not run out of money, and build a big business. And if you can't do that with certain, with one entity, you're going to have to bump and run onto to the next entity. And so I just think, once you kind of can put yourself in those shoes, then things are, a little bit easier. But yeah, it's a challenge, but it's a huge opportunity. Like I said, there's a lot of value to create by being creative around how you structure commercial relationships.
I agree. I think it's totally worth it. And Matt, I'd love to see the SIPA. I have not seen that document, but timely because I'm working through a service agreement right now, and about to take their input from their master service agreement, which is probably going to be 50 pages long, and try to whittle that down to a few pages that matter to us. So yeah.
Well, I'll template expectations a little bit. It is not like one agreement to rule them all, but for the right type of scope of work and for the right time of the business, what we've seen $100,000, $250,000 transactions getting captured on a 2-page agreement, which is what we limited ourselves to in terms of the simplicity of it. But yeah, happy to share it with you and anybody in the meeting today who's interested.
Yeah, I wanted to just leave a little bit of time for Q&A, but I did have one last question, and it was for Chris. I'm wondering, we talked a little bit about the place at which the firm is looking, and it's a little bit later down in the stages. I'm wondering, when you're looking at an idea, potential business, and it's got some traction behind it, but it might be worth the additional impact investment. Is that a place where you feel like maybe there's a swing, or is there a time where you feel like there's a point at which you want to put money into something that might be a less certain definite win?
Yeah, I mean, we're very motivated for big wins, and we're very motivated for big wins that have impact across a lot of different areas, and that can be financial, and otherwise. And I guess this is kind of into the question of the longer term horizon, like how are we feeling about the risk associated with the longer term horizon, particularly as it relates to the energy sector, and particularly as it relates to the duration that's going to be required to achieve, carbon neutrality and net neutrality. So I think the one big area that we are very focused on is this issue of carbon and low carbon energy systems. And the movement that we've seen in the last, I would say year to 2 years has been more than we saw the last 15 years. And a lot of it has been driven, a large portion. So there was some movement in the regulatory carbon markets to create now, I think, over 30 different regimes that are 50 different jurisdictions, 30 different trading markets for carbon in particular. That focus on, I would say, carbon neutrality has flowed into the corporates as well. So the corporates now, I think the last number I saw, 1,500 companies have committed to net zero goals. There's a $230 billion regulatory carbon market, and there's an emerging and budding $250 million voluntary carbon market. That voluntary carbon market's projected to go to $50 billion by 2030. And so what's happened is everyone is scrambling to figure out, how am I going to execute on these commitments that I've made to my investors and my community on carbon neutrality? And that has opened up a huge space for innovation, both in the short term and the long term. We've been doing a lot of work on kind of in the short term, what can happen on sequestration, both nature-based solutions and trading platforms to be able to deal with those. We have an investment company called Expansive that is creating a trading platform to be able to trade differentiated commodities. So if there are ESG related attributes to a commodity, it can be traded for a pricing premium, and cleared for a pricing premium. And so we're kind of seeing some short-term things. And then I think with HERS, we're all very familiar with what's happening in carbon capture and sequestration related technologies. And we continue to see those as longer-term timeframes. They tend to be pretty capital intensive, and probably from a market perspective, the thing that is, the most uncertain is at what point are the pricing in the carbon markets going to equalize with the pricing in the commercial markets? And so in the carbon markets right now, we've seen carbon going from $2, $3, $5 a ton up to now being priced around $50 a ton, and kind of the general consensus that the break-even point, for a lot of the sequestration technology is about $100 a ton. So we're in this interim period right now where you're seeing a lot of money flow from probably the more impact-oriented, deep-pocketed longer horizon investors, but we're really close on that longer horizon to a point where I think that the financial investors can really jump in. Where we are very active and see a lot of activity is kind of in that near short term, which is the electrification. And I mentioned that before. I mean, of the last investments we made an investment in actually 2 Greentown lab companies, Titan Advanced Energy Systems, which is looking at real-time monitoring of battery systems for battery control and optimization. FreeWire technology, FreeWire, which is a fast charging company. We've just made an investment in Infinitum, which is a motor company, higher efficient, lower footprint, electric motors. I mean, kind of the list goes on around what we're seeing, in kind of the electrification space and the technology that's coming out of the EV space and being applied into conventional industry, I think is very compelling. So yeah, back to your question about risk. I mean, I think what we're looking for is large global macro trends, a market environment that will allow those technologies to land and be profitable. And when we see that, we're able to kind of take a little bit more risk. I would say that the second thing is we really enjoy co-investing alongside of other investors as well, especially in these companies where there is they are more capital intensive. So working in syndicates, co-investing, building communities to drive growth are things that we're very, very interested in. We see that as a de-risking opportunity for us.
That was extremely comprehensive. I really appreciate that. It's a great insight. And I want to make sure we grab as many questions as we can from the audience. We got first one in order of receipt here. We got, as the topic is energy perspectives, what do you think is the most underutilized, untapped source of clean energy generation, and why? And I'll open that up to the floor if anybody wants to go for it first.
I'll throw a quick one just because I'm biased, but I think thermal energy storage is underrated, is underutilized. And I spent a lot of years working on thermal energy storage. It's a very simple technology, but very effective when utilized in the right place. And we use it quite effectively as a distributed energy storage, thermal energy storage in the Indian application I mentioned. We don't see that much here in the United States, and I'm surprised to see that. But that's why I think it's underutilized. So
I'll take the bait, but I'm going to maybe punt on the answer. But I think the most underutilized resource is the intellectual capital of our country. I think, our whole origins was too many people thinking about software and apps and not thinking about these really hard problems. And that's what we wanted to go out and solve for. And we've got such a long way to go. We don't have enough people from underrepresented communities, feeling like they've got the financial resources and the network resources in order to bring their ideas to the market. That's got to radically change. I think as consumers, probably the biggest impact that we could have on addressing, climate related issues is we change our behavior. So for me, the biggest untapped one is in our hearts and in our brains, and especially in our country.
Yeah, and I think the one thing too is that it's not a binary question to me, or a single answer question. It's a multi-answer question. So the one thing that has obviously happened is we've gone from centralized generation to distributed generation. We're seeing innovation on all kinds of fronts. I mean, it was energy storage as lithium-ion batteries. We're now into chemical storage and hydrogen as a storage medium as we go through. So I think the more distributed we get, the more opportunities there are. I also say that all energy policy is regional. It depends a lot on the resource that you have. And so the solution in one area is going to be different necessarily than the solution in the other areas. And so I think we're just on the edge of a big wave of innovation across a lot of different forms and mechanisms in generation, in storage, and advanced transmission distribution. And we have been talking about energy efficiency for a very long time. And hopefully we're now at a point where the hardware and the machines can automate the behavior and really make a difference on the demand side.
Next one, we've got curious to know how you all think that the U.S. specifically can maintain leadership in in the energy sector versus other geographies with cheaper options. So somewhat related, but a little bit different.
I'm happy to take the initial step up this one. I mean, look, I think the SBIR program is a phenomenal program. It's 2% of people, of agencies with a certain threshold of research money. It's enormously powerful, as Sorin mentioned in the beginning. I think for an Activate fellow, on average, they're getting about $2 to $3 million in government funds at the earliest stages, and that's been enormously critical in order to be able to develop the technology such that private markets are able to unlock it. And when they do so, there's just an enormous multiple and an enormous leverage on top of that when you look at the intellectual property, the jobs creation, the new products. And so for me, both selfishly, but I also think from an impact standpoint, it's we just need more money at the earliest stage and get more of the intellectual capital at an earlier stage across a greater spectrum of people, feeling like there's a viable career pathway for them to work on these really challenging problems. And then from there, there's a variety of different answers of like dealing with market competitiveness and dynamics and incentives in different countries and manufacturing and all that stuff. But like, it starts with having a really strong, solid foundation. And like, we have one, but unquestionably it can be amplified enormously. And with that stronger foundation, I think we would be in a better position to compete on some of the downstream challenges.
I was going to say the exact same thing. I think this is very unique to the United States to have this kind of SBIR program. You don't see that anywhere else in the world. You see elements of it or certain elements trying to copy that, but say Europe or India, where I spend a lot of time, there's nothing like that. And that really gives a big competitive edge for American startups. For a while, we even, we're talking about government programs and emerging markets. Sometimes they seem to be sort of orthogonal, like, government programs tend to fund only development here in the United States. And that's true. All the research and development was always done in the United States, but we actually tackled markets overseas, emerging markets, which I think is sort of the untapped next frontier for American startups. And so this government funding SBIR is enabling us to actually go out into these geographies and compete more effectively. We design with American products, with sometimes American manufacturing, all of that. We compete overseas. So I think it pays off in so many different ways, and glad to see that program continuing and expanding.
Maybe one last thought on this topic is to continue to build on the energy industry that exists in kind of the prominent position that exists in the U.S. today. So, I am seeing innovation hubs pop up all over. I mean, Houston is obviously an energy center of the world. They've now got a Greentown Labs. The work that's going on around these innovation hubs. I know I'm aware of some work that's going on in Tulsa, Oklahoma. Think about how do you build on the foundation that exists in these areas where we've got great universities, we have people that want to deploy money, we have great jobs that can be that can be centered not at coming out of MIT and Stanford, but a lot of really great institutions around the country. So continuing to be supportive of these like innovation hubs and build on the energy foundation that we have in the US, I think is going to be critically important.
Mike, there was one more question, I think, from an entrepreneur about how to engage with corporates. And I'll just throw it real quick because the answer is right here in front of us. Matt, with Activate, programs like Activate that connect founders with corporates. And in our case, it was Greentown Labs. I mean, being part of Greentown Labs is what allowed us to engage with this corporate who's also part of Greentown Labs. So corporates love to participate in these accelerators, in these incubators. So just getting to the right place, whether it's Greentown Labs in Boston or Houston or another accelerator or another co-working space or program like Matt's, and I think you'll find the right partners.
I mean, you guys barely needed me here. This was a fantastic discussion. I really appreciate it. And Sorin, thank you for closing us out with that question. I really wanted to get to it. So thank you all for your time. I'm being yelled at that we got a hard stop. So I don't want it to go too over, but really thank you so much for your perspectives.